Perfect, here we go. We are live on the first webinar for 2020 under the DFI webinar series. We will just give it a couple of minutes for everybody to join. I can see that we've got over 160 people signed up for the webinar today. So let's give you all a minute or two to join before we get going. So just bear with us for a moment while we wait for everyone to join. Excellent. So I'm seeing some very familiar names joining us today, which is wonderful. Welcome to Andy, Maddie, Manal, Kim. We've got Sada, Tamala, and many others joining. So I'm just giving a little shout out to say welcome to those of you who are joining us today. This is our first DFI webinar for 2022. It's been a bit of a break. We haven't had one for a little while, so I'm absolutely delighted to be back and hosting with you. For those of you that don't know me, my name is Sarah Corley, and I'm Divisional Director at Digital Frontiers Institute, and it's my job to run our community and continuous professional development program, and this webinar being one of those. Before we officially start and I introduce our special guests, just a couple of reminders for you. Firstly, we're recording the session today and we'll be sharing on our YouTube channel. So if you happen to have any issues with technology or dropping off the call, don't worry, you'll be able to catch up on the recording. But more importantly, if you really enjoy today's session, which I hope you do, you can also then send that link to your peers and colleagues within digital finance so that more people can see our webinar today. We're also going to be having your questions, so we'll be taking them throughout today's hour, so don't feel like you need to wait. You can pop them in the Q&A function, which you'll see towards the bottom of your screen. So if you could pop your questions in the Q&A, not the chat, it will make my life much easier to see them and then be able to actually ask them and get your questions answered by today. So wow, our first webinar, and I'm joined by a real, I think a bit of a celebrity. Very much welcome, Natasha de Terán. It's wonderful. We met and collaborated for the first time on Pathway to 17 Summit, where we spoke about central bank digital currency. But I'm really excited to chat with you today a bit more about building payment systems. And that's going to be our focus of conversation today. So let me briefly introduce you to everyone. Natasha, before I'll ask you to also give a quick background. So you are working at the intersection between financial services, technology, communications, and public policy. You're a member on the Bank of England and HM Treasury's CBDC engagement forum, and also the author of, and I'm very lucky to have a copy of your book here, which inspired the conversation today, of The Payoff, which I'm personally finding fascinating. And I know that I've picked up some key facts in that book that will be form the basis of some of the questions that I'm just dying to know the answer from. So welcome very much, Natasha.
Thank you. Thank you so much for inviting me today, Sarah, and thank you everyone who's listening. I'm neither a celebrity nor an expert, but I have been doing quite a lot of thinking about payments recently. I worked in payments for the last decade and then wrote the book that Sarah's kindly plugged for me about payments, and I continue to work in that sort of area. And I'm really delighted to be here today. It's a great audience and a fantastic opportunity. So thank you. And talking about my favourite subject, payments.
Well, I think it's a big topic of conversation that we all really love talking about because, actually it is so key, right? And so I guess that's my first question and a great opener there is, what is it? Why are payments really payment systems such an important thing? We all probably use them multiple times every day without even thinking about it, right? So it would be wonderful to sort of set the scene for us. What is so interesting for you and why is it so important for us to think about?
Well, they're fascinating. That's one good reason to think about them. This hugely important, complicated network of networks that we all depend on blindly. We don't think about it, and then we just expect them to work. We don't even just expect them to work. We just kind of presume it just happens, and yet they're changing all around us. But why are they important? Well, our societies are monetary ones, and we're kind of born into this monetary bargain that doesn't promise us untold wealth. It doesn't promise us how much we're going to earn or how much we're going to leave behind. But it absolutely requires us to be able to participate within it. We have to be able to participate within it from a payment standpoint. And that's the only way that we all have to participate in it. I mean, some of us might be lucky enough to save, to borrow, to do other things in the monetary society, but we all have to be able to pay and be paid. And without a functioning payment system, you know, that money doesn't work, and modern societies or monetary societies also don't work. But they dictate our opportunities, payment systems. And as they've got more sophisticated, our opportunities, our linkages, our reaches have expanded. The things that we can do with money have become much more plural. I mean, just imagine, for those of you that use Uber, you know, it simply wasn't possible before payments allowed Uber to be what it is, or Netflix, or so on and so forth. So that they're incredibly empowering, but they can also be incredibly restricting. They can have implications for privacy, for civil rights, for civil liberties. So they're very, very exciting and interesting always. And the history of payments is so strongly interlinked with the history of economic growth and opportunity. But they're changing now so incredibly fast that you know, if you didn't think they were interesting before, you really have to be convinced that they're interesting now.
You know, I mean, many of us are on the call, we talk about instant and inclusive payment systems. So we all know it's really important. And I think we've all begun to understood somehow that, you know, payment systems can include or exclude depending on, you know, how they're set up and things. I was shocked when I read, was one of the facts that I read in your book, actually, and I wonder how many other people would be shocked. So, you know, if you are, I think, you know, pop in the chat that you're also surprised. But even those of us that work in digital finance don't always fully understand the intricacies of how payment systems work or the costs that are involved with them. I mean, I think in your book you talk about a cost of around between $1.5 and $2 trillion that are the sort of are made in a payment system. So how does this money, whether payment system, you know, how does it generate money for the providers? Why does that $1.5 to $2 trillion come from?
And it could be more. It's a very difficult market to quantify. But I wouldn't worry, Sarah, about people not making money in payments. People are making a lot of money in payments, and there's more people piling into payments. Whether they can all sustainably make money out of payments over time is an open question, I think, and a lot of that will be dictated by public policy as well as by our payment choices, and it might change. It might differ from country to country as well. It depends where you live is the answer to that question, and it depends what kind of payment instrument you use and where you're using it. I'm in the UK, and by and large, if you're banked, you don't explicitly see payment charges. You don't know how much merchants are being charged to receive the payments, but as a consumer, you're not explicitly charged. If you're unbanked and you use payment cards and other forms of payment, you can face explicit charges. So it very much varies, but I think by and large in a lot of the developed economies, it tends to be the merchants that pay the charges, and they can be fee-based. They can also be based on service charges. I suppose we all, a lot of us pay with sacrificed interest in our current accounts. What we keep on balance for ready access, we're not earning interest on, and that is a way of banks making money out of the payment, the payment service that they don't explicitly charge us for. So there's lots and lots of different ways, and I think as the payments change, it will be interesting to see what choices people land on, or countries land on, in terms of how they want this to be paid. Another very important way that we pay is credit. So one of the biggest ways of making money out of payments is by providing credit, which is not providing payments, it's providing credit. It's different, but notwithstanding that, it's a very lucrative area for revenues. And then finally, the growing one is probably data, and that's monetizing our payment data, using it for targeted advertising, using it to sell us other products for cross-selling and so forth. And that's very much a growth area. I think in a lot of places it hasn't been determined yet to what extent, whose that data is, who should have the choices where it's used, what it should be used for, who it should go to. So lots of really interesting questions, because none of us really want to pay, but we might not want to pay in other ways either.
And I guess, there has to, in order for us to feel safe and confident with the payments that we're making, there has to be some sort of give and take between, there needs to be, they can't run for free, right? I mean, no. Infrastructure that's required, we have to understand that, we have to be, for it to be safe, and all of those, that we actually pay, we're sure that the money that we've paid at this end gets to where it needs to go. It's impossible to do that without without infrastructure and without all sorts of, arrangements, etc. Yes,
and I think that's one of the biggest probably headaches of central banks, is overseeing that reinvestment, making sure that the systems are fit for purpose today, tomorrow. And I think where we have got digital payments, they take off at such speed, and the volumes multiply as our dependencies grow and as new commercial opportunities arise. We just multiply the amount of business payments that we put through systems, which means they have to be that much stronger. So that reinvestment has to be continual. And to some of the new money that's coming into payments, that's something they have to think about. You get to a certain size and it really, really, really has to work, which means that there isn't so much for the, to skim off on profits, because you have to invest back into the system and so forth. Look, just going back to you touched on inclusion briefly, and then the cost of payments. And I think one of the very undesirable consequences that we do see in some areas is that people that have bank accounts and that have balances in their current accounts very often are paying for free, whereas those that don't have bank accounts or don't have balances in their bank account, they sometimes end up paying to pay. And so what you end up with is a system whereby the poorest are paying the most to pay. And of course, the poorest have the least vested in the monetary society. So it's an unfairness that needs to be looked at, I think. It needs to be thought through, particularly as we become more digital. And as digital becomes more sophisticated, perhaps some of us will want more sophisticated instruments and means by which to make payments, which may also exclude people. So I'm not sure that inclusion is always top of mind in payments. I think we've heard a lot about financial inclusion writ large, a lot about credit and microcredit and so forth. But I think in a lot of the developed economies, there hasn't been as much thought to financial inclusion when it comes to the most basic entry point. What does it mean for someone if they have to pay £1 to take out £10? Yeah. And is that a society that we want to live in? That makes them do that.
Disparity, isn't it? I mean, for those people sending thousands of dollars, pounds, euros, actually the paying a fee for that is quite different to, just trying to send the very basic of money to allow someone to go, do their grocery shopping for the week, and having to pay a charge on that as well. And we're not going to get into it here because I think it's a long conversation, but also the taxation, for example, that some, government trying to levy on digital payments also won't help with that agenda either, right?
No.
But that's probably a long topic that we can have. a difficult one. So, I just want to keep coming back to this concept of digital payments and payment systems. And we've had some wonderful questions coming in the chat. And so I'm really excited to ask some of them too. But I just want to unpick a little bit what you said. So you said, Natasha, that it differs from country to country. And, sort of when I think about, for those of you that have done DFI's CIDM course, I got partnered with somebody to do a project on payment systems. And I got partnered with someone in America. And I thought, geez, that's going to be really boring because America's going to to what I'm used to. And actually, I was really stunned at how much Americans love checks. That these bits of paper are still such a massive part of their payment system. And then when we think of, when I think of Kenya, I think about M-Pesa. When I think about, rural areas in Africa or Asia, we know cash is still king. So what shapes people's choices and behaviors, with payments? And just give us some thoughts on that.
Well, payment choice is interesting because very often we don't actually choose how we pay. It's really a sort of social, it's a convention, and I have to fit in with my surroundings. If I want to live and eat and, you know, get around somewhere, I have to pay and receive payment the way that it works there. There's no point turning up with cash in London, probably, or wanting cash in London. But, you know, there might not be any point turning up with a smartphone and Apple Pay in, you know, in the Shetland Islands or in, you know, somewhere else. So we are seeing more payments choice. And we're seeing a proliferation of payment instruments. But that that choice tends to manifest itself in large, in areas where you have large infrastructures. If I go to a corner shop, I probably don't have a choice of payment instrument, and I will pay the way that the shopkeeper chooses to pay because he doesn't want to offer me 5 different modes of paying. If I went to Harrods, I could probably pay 5 or 6 different ways, and that would be good. But Harrods would offer its array of payment instruments, acceptable payment instruments, based on the consumers that it thinks it can attract or will attract. Now, most payments, except at border points, do tend to happen in country. So our payment choices are sort of shaped by our national boundaries very much. And there are some exceptions to that, but by and large, that's the case. And I think this is one of the most fascinating things about payments is that, I mean, I've grown up and the changes in payments over my lifetime have been absolutely enormous. But I don't think it was until the last 10 years when I was working in payments that I realized that society had a role to play in choosing, in, you know, really shaping those payment choices, you know, whether we kept checks, which became a very political issue in the United Kingdom. We've kept them. No one uses them, but we kept them. And I do think it's something that society needs to be very involved in, particularly as we go through this transition to digital. And I say that not because I mistrust central bankers. I don't. I mean, you know, some perhaps more than others, but it's not because I think they're inept. Far from it, or that they'll make bad choices. But society needs to trust in payments for payments to work. And for societies to work, we need payments to work. And if the choice is about digital payments, and there's lots of big choices being made and about to be made, particularly if we move to digital currencies or digital currency frameworks and so forth. If society is not involved and subscribed to those choices, then that I think is problematic. You don't want society waking up one day and saying, oh, I don't trust anything that's here. So that's what I'd say, get involved. And if you're in the payments or financial sector or the central bank sector, get society involved in your decisions, because they're not, as anyone knows, they're not just yours to make. They have to be made by the whole of society. Difficult as that may be.
Yeah, I mean, as you mentioned, there's, you know, the trust, right? People need to be comfortable and trust the choice that they make. And, you know, going digital, it can, you know, I suppose rural or older population are particularly vulnerable in that scenario. If things go too fast digitally and we lose the ability, say, to use instruments like perhaps, you know, checks that maybe sort of the UK American market would be more used to, but just simply using cash is what many people would be used to using as well. So it's not about actually, you know, we need some sort of variety in that to be able to enable people to choose what they trust. And I guess alongside that, the use cases too. I mean, we've talked to many webinars before. There's absolutely no point having any form of, you know, e-money where whoever's issued that, if you can't use it electronically too, if you've got to kind of all the time to use it, then that also becomes a challenge as well.
And going back to your point on cash, which is, you know, whether it goes altogether, I'm not sure that it will, but certainly as its use shrinks and we move much more to, you know, maybe to, I don't know, a 99% digital future, the digital cash equivalent, I think, is a really interesting problem for central banks to grapple with, whether they grapple with it through CBDCs or otherwise, because there is a lot of attachment to cash to the anonymity of cash, even sort of law-abiding, people, middle-aged people like me, can understand that there's a virtue in having that anonymity. I can also see that there's probably a very significant downside as well. But if we're going to have a digital version of cash through which we necessarily have to, for money laundering and other purposes, we have to lose the anonymity to which many societies are very attached, then let's improve on some of the downsides of cash. So cash isn't interest bearing. Is there a way to offer those that are cash dependent and poorer an interest bearing cash like instrument in the digital world? Is there a way to make it safer? Almost certainly there is. So I think as we move, we need to think about all those things and improving, not just expecting, well, everyone's going to come along because they're going to have to. I think making the experience a positive one will be very key.
Absolutely. So Alex has a question that is very dear to me because it's very similar to the question I had, so who can we look for examples of, good, aspects of payment systems? I mean, we know, India actually has, huge numbers, right? Which is, the Aadhaar and, its infrastructure has allowed. I mean, we often hear, the UK being, claimed to have the best payment system. Who can we look to and learn from? Both, I'm assuming, we can probably learn from people who've done it really well and probably people who haven't done it so well. Where should we be looking? Give us some tips.
I think everywhere. I mean, I think the claim to world leader in payments is a tricky claim. I think you can have the world's worst payment system. I'm not sure you can have the world's best. And the world's worst would be, unsafe, untrusted, slow, and expensive. I don't know which it is, but I think we could probably all agree that that would be a bad payment system. But the best one depends on the society that it's serving. So I don't know, maybe India's would serve Britain better than Britain's and Britain India's. Who knows? But I think there's good examples everywhere. And I think regardless of whether someone has a good one, it's always interesting to look at other ones to see what choices they've made and why they've made them and to understand them and how they've dealt with different problems. And, we can all look at Kenya and M-Pesa. We can look at problems there. We can look at successes there. We can look at the UK. We can look at India and India's work with Aadhaar and the UPI has been absolutely fascinating. They've moved incredibly, incredibly fast. But I don't think you'd get America to move that fast. I don't think America could think, right, well, I'll do what India did and I'll move as fast as India. I don't think it would because it's got legacy systems and it's got a very different setup with its banks and market infrastructures and so forth. But I think the public policy choices, now we might not have each other's same policy tastes, but I think it's still useful to look at the decisions that other countries have made, not least because they might be asking questions that we haven't asked ourselves, that we need, that we think, might trigger us to say, well, actually, we need to ask that question too. So India's imposed limits, I think, on the amount that any given wallet provider can have as a market share in India. That's not necessarily a policy choice that will be made in the States, or maybe it will. I don't know. But I think we can all learn from each other, even if our tastes, our histories, our legacy infrastructure, our levels of literacy and financial and digital literacy and enfranchisement might be very different. But I suppose the areas that we can most learn from each other, I'd say public policy, financial inclusion, or payments inclusion, even though we might have very different starting points, and then fraud and cyber risk. And there, I think we can all work together and learn from each other.
Absolutely, and we've got a question to do actually with consumer protection and fraud from Munga, and also Zafira has asked about customers' data and protection. So, what are some of the best practices in terms of areas of fraud and customer data and protecting the customers that you could share with us?
Oh gosh, I don't know. I don't know. I really don't know. So I couldn't say. I think with with frauds, one of the problems is that it is a scale game detecting fraud. So the more data you have, the more payments you see going through a system, the more likely you are to be able to detect fraud if you pay attention and make the necessary investments and so forth. I think the cards have an extraordinary bank of data, and certainly in the case of my cards, they always know when it's not me. They always seem to know when it is me as well, which is probably even more problematic, I'd say. And that takes you into the realm of, well, where does competition end up? Because if it's only, if it's only those with a huge bank of data that can ever create the safest systems, what opportunities are there for competition in new entrants in the future? And that's an area that I think people will, public policy needs to address in the future, because is that the payment provider's data or isn't it? Now there you can get into privacy questions. Well, Visa knows that if I go to the supermarket twice a week, that's fine, but if I suddenly ship up in, I don't know, maybe something I didn't know, on a gambling website, they would say it's not me. Well, are we happy with that? Because you could argue that there's elements of invasion of privacy going on there. I would rather be safe. But then if you say that data needs to be shared with other people, can you depersonalize it and still make it useful? So lots of very interesting questions. I don't know what, I couldn't point you to best practice, I'm afraid. But again, I would say it's down to every country's taste as well as to what, where you put privacy on that line.
I think the insight there that you shared with us about, actually the big players often have an advantage having that data, and the smaller players, don't. And actually, how we need to sort of think as a whole, right? Actually, to make sure that it allows those new players that into the market. I think that's a really interesting point to remember. And I agree with you. Like someone using my data to sort of keep me safer is great, right? But actually, there is a really fine line between protecting you and potentially exploiting you if you're then using that data for other purposes that different for that. And I guess some countries are more worried about where that fine line is than others, and for some with higher fraudulent payments, that's going to be more important to have a clearer line there, I guess.
Yeah, I mean, a lot of the data can be depersonalized. Yeah. So it's not that there's someone, I don't think anyway, sitting there at Visa saying, gosh, she buys a lot of shoes.
You saw Natasha spent this money there. She did a large grocery shop on Wednesday.
But on the other hand, there are great big banks of data out there showing, where you spent your money.
Yeah. Interesting. Okay, so we've got a lot of people online here who are interested to think about, what they should think about when it comes to their working on their payment systems. What would you advise? We've got people from central banks, we've got people from fintechs, we've got people from private sector. How can we kind of make sure that all the different voices of people on this call, but also in the countries that that are heard in terms of national pay, in creating sort of payment systems?
With quite a lot of work, because payments aren't something that people naturally engage with, and central banks don't have, at least very few that I know, tend not to have a kind of direct day-to-day engagement with all parts of civil society, except through their banknotes if they issue them. So that is difficult, but it has to be done through civil society groups, so just getting to the widest possible groups of people in society, so that you're bearing their experience and desires into account when you build whatever it is that you're going to build. But that takes me back again to trust. I think the single most important thing that I think is quite often forgotten about with payments is that it's all down to trust. That is what a payment is. It's the exchange of my trust for your trust and our banks or credit card providers trust in the middle. That's it's a conduit of trust, really, an exchange of trust. It's just partly why you need to have society engaged in the design. And they don't need to be engaged in, designing what it's going to look like, or, yes, it has to be available on the phone or not. It could take you decades to get to a multi-hydrid payment system if that's what you set out. But it's really bearing their interests and fears and preoccupations in mind, and the way that they're doing commerce today, but also the way they might want to tomorrow. So, I mean, who'd build a payment system? We really are dealing with unknown unknowns, the unknown of people's fears, which often don't manifest until it's too late. But also, if you're building a payment system, you're never building it for now, because they take a long time to build. You're building it for 3, 4, 5 years forwards, and what will have changed in the meantime? What tipping points will be, will we be using embedded chips? Will we have iPhones? Will we have smartphones? I don't know. We might be, our lives might look very different. Might we have far greater need for lower value, high volume payments than we do today? What does that mean for fraud? So it's a devil's job, but people, we have amazing payment systems all over the world that have been built with the future in mind, and then are adapted as time goes on. So I'm sure we can. I think the cyber and fraud risk is obviously, without, if you have those two, you're going to lose trust. So you have to build that in. And then interoperability. So if you're building a payment system to displace everything else in your country, then it doesn't need to be interoperable with anything else, but that's a big single dependency. But let's presume that you retain cash as an option, then it's got to be interoperable with cash. And how's that interoperability going to work? What does it look like? Where are the endpoints? How do you access them? What do you do in case of downtime? But also interoperability across border. And I think I'd hate to misquote the IMF, but I think there was a survey this week on one of those sort of online polls saying, what would be the greatest advantage of CBDC? And most respondents said for cross-border payments. And that's presuming that CBDCs will obviously work better across borders than the existing system. But your ability to send money, not only with other, exchange money within country, but also across country, without too much friction and too much cost. And ideally in country without friction or cost. I think across border, you're going to have friction and cost.
Yeah, it's difficult to imagine the future. And so thanks for sort of trying to go with this into that. CBDC is something we've had so many conversations about, and obviously that's going to be something that we think about. I mean, does CBDCs change the need for payment systems and how they would work in your opinion?
CBDCs can be what you want them to be. So yes, if you wanted to, you could displace everything else in your country by building an amazing CBDC which obviates the need for anything else, and maybe state subsidies might help that, because it could be cheaper if that's what you're able to do. But you might not want that single dependency. You might want it to coexist. You might want your CBDC to act as a level setter within the economy, so that price stops here. This is you might want it to act for financial inclusion. You might want it as a level setter for privacy reasons. So this is the most private you can get in the digital world. You might want it to enable interoperability between other digital payment systems, or you might not want it at all. You might just want to sort of a digital money framework. So it depends, and each country is going to make distinct decisions on this, bearing in mind their own citizens, their own concerns about these different things. I think the conversation around CBDC whatever happens is an incredibly important one. And I don't think it can be a letdown, because societies are deciding through these conversations, which could go wider. I think in some countries, I think in the UK, I find it a disappointingly narrow conversation, not because of the public sector's trying to engage, but I don't see wider societal conversations about the issues, which I think is a shame. I think elsewhere people are much more engaged. I think in the Eurozone, particularly in Germany, they're very engaged on the issue. I think Sweden's very alive to the question. So I don't think it can disappoint, because I think a lot will change with CBDC, irrespective of whether they actually do end up as payment instruments like they've got in the Bahamas.
It's, I mean, there's so many things that it touches on, right? The actual sort of pressing the button to move the money around, whatever kind of button and however that's moved, is only sort of a tiny part of it, right? I mean, as you said, around it, it's the the public policy that exists. It's the, I mean, obviously we talked about trust and safety and the cybersecurity and fraud aspects of it, but there's also what the population need and want aspect of it, and trust that we've talked about as well, and we haven't even spoken much about it, but I know you mentioned digital literacy and how comfortable people are, and that will all influence what happens. And you also talked about downtime as well, right? And actually our infrastructures, electricity and the internet availability also have an impact. So it's like what I really love about the concept of talking about either, when we've spoken about CBDC, or even today when we've spoken about payment systems, you kind of, it's a big can of worms.
It is,
isn't it? I mean, you can talk about so many different things, but it's wonderful if you can have that conversation, because then you start to loop things together that are actually all barriers to financial inclusion, and we need to address all of them for whatever payment system you choose, or however, if that is going to be a CBDC or not, whatever that kind of tech is, almost sort of in the middle, that allows that payment to move electronically. The actual stuff around the outside is sometimes more of a hurdle in many ways. I mean, would you agree or disagree?
I think it can be. It's the things that we tend to think about the most, the plastic, or the iPhone, or the this or the that, or the other. But the technology stack is so kind of deep and wide. There's all sorts of things along the way that could stop me paying you. Is it the cloud provider? Is it the telecoms operator? Is it your broadband access or my broadband access? There's so many. There's so many different players and different operators in this hardware. There's software, there's routers, there's this, there's that, and the other. All of that is enabling my money to reach you. Which, going back to that idea about having a central bank digital currency ever being an immunizing kind of thing that could allow you and your citizens to operate no matter what your geopolitical relations were like with others in the world, unless you're a major geopolitical and technological power, huge technological power, that really isn't going to happen. So there's only probably a couple that can go down that route. But that interdependence that we all have economically, we're all connected economically. We're also, our payment systems are all incredibly interconnected, just as our economies are. So I think those that might think about building a CBDC to protect its own economy, you can do that up to a point. You can do that up to a point, but you won't be able to do that completely unless you have the entire technology stack in your backyard.
And kind of, I don't know, when we talk about inclusive payments, we often talk about, including people who are currently now financially excluded. But I think we can also use that to think about how we're including other, in the world, right? I mean, many of our countries, where there are, borders, there's a lot of trade that goes across those. And actually we should be sort of thinking about inclusivity, not just about people within our country, but hopefully people with, outside of our country, right? Rather than putting the borders up, actually increasing the borders across.
Yes, although central banks and governments tend to like currency sovereignty. So, I mean, not in all cases. Sometimes they're shared. but you can't, where that exists, you're not going to get away from that. I mean, I don't know that, to give an example, I don't know that Ireland would be happy if, Britain said, we just start using our pounds, thanks very much. And Britain, we know, isn't very happy about using euros. So there might be other ways, but there again, there might not, because you've got rules around money in different places, and taxation and other things that interfere with that. I think what you do want is just as, as we moved away from gold and silver to notes and coins, and we could carry notes in our pocket, and then we had banks and so forth, it was easier for one village to do business with another. Yes, to the extent that you're not at war with your neighbouring country, yes, you do want to make it easier to do business with them. And it'll be interesting if, CBDCs do take off, whether we start to see particular economic links lead to economic or, CBDC links, whether there'll be a preference. When I build my CBDC, will I look first to my biggest trading partners? Or on the other hand, I might take the view, no, I'm not going to look to my biggest trading partners. I'm going to look to those countries in which I've got less trade, perhaps because there's more frictions. And so how am I going to address that? On digital inclusion, I think, and financial inclusion, I think one of the other pleasures that the central banks have to grapple with, or those thinking about payments, isn't just digital inclusion or financial inclusion today, but tomorrow, because everything is moving so very, very fast. What allows me to pay today may not allow me to pay in 10 years' time or 20 years' time, and that's, whether that's my tech knowledge or my the affordability of the assets, the physical assets or software assets I need to get online. And as payments become more sophisticated, the demands on the systems may get more sophisticated, and therefore people might fall out of inclusion into exclusion, which is, it's sort of counterintuitive, but it's not entirely impossible either. It's something that has to be considered.
So what would you say? I mean, we've got a great question that came in on the chat here. What would you say that the top sort of 3 or 4 key enablers for an inclusive payment system are?
Accessibility, so that everyone can get to it. Everyone can carry cash. Can't all get to cash anymore because, or not as easy as they could, but that everyone can access it on their on reasonable terms, and that reasonable, physically or virtually, but also affordably. So I think that accessibility is key. I think interchangeability or interoperability is key. While you can make a lot of cases for having clearly, walled gardens of payment systems, that's kind of what currencies are. And look at the problem in cross-border. And if we go back to that, I think it's the IMF survey where most respondents said they were most worried about cross-border payments. Well, why would we want to create that in-country? Why would we want to have in-country frictions between, your digital this and your digital that? I don't think that's a helpful outcome. I think there could be quite a lot of problems around sort of, inflation by the owner, where are these assets going to be housed? So there's a lot of other problems that could come with it. On the other hand, if I live my life entirely virtually, within a defined virtual universe, you could also see, well, actually, it would be much more efficient for me to only have my money there. So there's difficult questions, but I do think that interoperability is key.
It reminds me of like when mobile money first came out, and without that interoperability between different mobile money providers, you'd end up owning like 4 or 5 SIM cards so that you could send money to different people, and you'd have to keep swapping them in and out of the phone. I mean, I think a lot of countries and a lot of have moved towards being able to pay different mobile money providers using the same SIM card, but that kind of clunkiness, that means you've got to sort of go use different channels or different things in order to pay people because they're not all connected to each other is a real is a real point of friction.
Yeah, it's a very, I mean, it's economically very compelling for the operators to secure all of this. But it's a retrograde step. I mean, you'd be going back to this, where you could only cash a check in state, or you could only, cash a check written by your bank, as 100 or 200 years ago, that was the case. We'd be going back to that era. But it would also, I mean, I suppose, for those that prefer large private corporations to central banks as the guardians of the financial system, I suppose that's, you might like that. For the rest, I think probably interoperability at par. And I think that's key, that there is, it's not just that you don't have to change SIM card, but that if you want to pay me, your Vodafone money, and I happen to be an operator, I get 100, I get 100 of what you gave me 100 of. I don't get 98 or 97.
And you touched on a good question that's coming from Fahad. So, public or private, I mean, do we want, is an inclusive payment system better in the hands of a public entity or a private entity, or some sort of maybe combo of the both? I don't know. I mean, there's pros and cons to each, but it's, maybe you can share some of your thoughts on that. Without getting yourself into
very decided on that. I don't think Britain is. I don't think China is. I don't think the US is. I don't think Europe is. I think what we're headed to, if I had to sort of make a guess, is a predominance of hybrid systems, which is sort of what we've got, but just a more kind of digital age ready hybrid. So where you have some of the underlying infrastructures as sort of public utilities with various degrees of public sector ownership in a lot of these places. You might have a private layer on top of that, but they have to operate within the confines and the parameters set by the utilities. I mean, it's a much deeper philosophical, political question, which I'm not going to hang my hat on. But I do think the public sector has to be alive and involved in order for it not to become private walled gardens of money. I don't think in any of those countries, any of those regions that I mentioned, so whether the United States, the UK, the Eurozone or China, I don't think we'll have private walled gardens of money. I think there will be barriers to prevent that.
I guess it's always trying to, keep an eye on public interest, and right, that actually, we want something that's open and transparent as much as, feasibly possible. I mean, obviously without, we're never going to know the ins and outs of every single person's payment, but actually, and being able to trust and know that the entity that's making those payments is doing so with some sort of best interest of country and people in mind, right?
Yes. But at the same time, you also want innovation, you want investment, you want competition. So
and that comes from the private sector, right? So, I mean, we know our central banks don't have hidden pockets of cash to invest in all of these things sometimes. So that collaboration can really bring, innovation in the space.
Yes, although elephants can dance, but you could also see a scenario where a society decided actually, well, let's put our eggs in one central bank basket and have it. And if you're particularly if you're a smaller economy and trusted, maybe that is a good way to go, and you can have public-private partnership or just simply public sector. I think it will depend on the interest of any given one. Such interesting questions.
And then we've got another sort of kind of questions that have come in, and they're sort of similar from Gerald and Joshua about, transaction cost is a real issue, particularly in developing sector. We know that puts people off. How can scale and be achieved so that they, what sort of things are involved in trying to help us reduce those transaction costs so that it actually becomes easier, simpler to use them both, within country and also cross-border as well?
Within country, there's subsidies. I think there's awareness as well, because while it may cost me more to send you money one way than the other, if it's safer, and I keep interest to the last minute and you earn interest at the first minute. And that's understood, and we understand that. So we understand, both of us understand that the risk is less, so we might be more attracted to use the electronic or the digital method. But it is, it is a volume game. So is it partnering with other people? Is it letting outside operators come in on fair and reasonable terms? Is it legislation pushing prices down? There's lots of different ways it can be tackled, but basic payments are a scale business. I think across border, it's a lot of the costs are, first of all, you have less volumes across borders. So if you ask me to do something, I'm a bank, and you ask me to do something I don't do as often as all the other things I do, I'm going to charge you more for it. But if I have, if I have to worry about money laundering and sanctions rules and know your customer and so on and so forth, all of that has to be priced in. And I can either make the choice of pricing it into everyone and therefore making my domestic payments unattractive versus my competitors, or I charge it specifically at the cross-border level. Now, the more trade two countries do with each other, the more a bank at each end will be set up to deal with the other countries' inflows and outflows, and the more that they'll hopefully, in a competitive market, reduce their cost for transacting. I think good trusted ID systems would help, but that also presupposes that the sending and receiving country trust each other's, which isn't always going to be a given. And of course, I think what we do see is when you look at the relative costs of cross-border payments, it's not the frequented the high volume corridors that are the most expensive, the high volume, high value, because investments have been made, there's correspondent banking relationships in place, the infrastructure's there, and they're very competitive markets. But UK to the Philippines, I don't know, but I would guess it's significantly more expensive than, say, Spain to the Philippines or US to the Philippines, because they're more used. But US to the Philippines will be much more expensive than US to the UK, and it sort of is what it is. And there is a lot of work being done, and a lot of work is being looked at by the the FSB and the IMF and the BIS. But I think a lot of it, until you sort out the compliance and money laundering and those kind of obligations and make them, the banks simply have to get better at doing them. The rules have to become easier to implement. It would help if there was less politics all around, because there's quite a lot of politics in it. But until all of those are solved, I don't see it being solved, that problem.
So the cross-border payments are, we've been looking at them for a while. We've been seeing the rates are very high. We've been saying they need to come down, but we've not seen them dropping as quickly or as rapidly as we see in country. And I guess those are the very reasons why. In country, you have one jurisdiction really, whereas when you start to involve more than, you need other people working on their processes at the same time, it can be quite challenging to create that, that across multiple countries.
Yeah, I think it will come, and I think in Europe we've seen a very big, and part of that was legislation as well, certainly across the EU, but also innovators like Wise and so forth and Revolut have really driven down costs. But it comes down to where there's the economic opportunity, where they can really drive down the costs is across the corridors that are frequented. So if you want Kenya, Mali to have lower rates, then start a lot of commerce between the two countries, and the price will come down. But where there isn't frequent traffic, there isn't an economic case for people offering a lower cost service. But whilst we've got exchange rates, and whilst we've got, which we'll always have, I think, the financial crime obligations, there's going to be friction and cost. And I don't think CBDCs can iron that out. I think better ID systems, more trust, and that's a bank in France trusting the money laundering systems of a bank in Morocco, and being able to rely on them, and vice versa. Those checks and balances that we have to keep us safe, and prevent
activity that we don't want going on with our money, and fraud, and money laundering, and they're kind of necessary, but also some of the things that really slow things down, right, as well. And so it's trying to figure out, what are the balances, really, isn't there? We need to have those in place, but how can we, like you say, how can we do it if we trust each other's systems, or we have ID that we can recognize that makes that easy. But the conversations to get onto the same page must be incredibly difficult. I can't imagine where that they're going to get resolved overnight in any way, shape or form.
No. And then, we didn't touch on tax and, export restrictions and import restrictions. So, all of this has to be done. And it means things move slower.
Yeah, it's a sort of, as you said, trying to protect and make, what your own country's interests and its population's interests. And that is sort of a number one priority for, and then being able to sort of play, with a larger range of players, that inevitably will be a much more difficult and slower conversation, slower change, I suppose.
Yeah, but I suppose more optimistically, the faster your payment system is domestically, the faster cross-border payments will work in your country. Now, and so if all the countries move to faster in domestic payment systems, that's a really good start. You'll still have friction at the borders, but once it arrives in country, it can be instant. So that's, I'd be a bit more positive.
Well, we've got the last 4 minutes, so I was just going to ask you, what are key things that we should focus on and think about? So actually, that's a good one. So cross-border payments, it is a difficult, a pain point for many, but not for everyone. So actually, I think it's a good recommendation, sort of, if you make your payment system, as accessible, as interoperable, and as fast as possible, then that inevitably will also help cross-border. What else was your final kind of thoughts and pieces of advice to share with everybody on the webinar today?
Oh, I'll take to give advice.
Well, say thoughts then, we won't use advice.
Gosh, I don't know, look at what everyone else is doing and talk to everyone else, and look at the opportunities and the decisions they've made not to do things, the things that they've scrapped. And it seems to me, never having actually built a payment system, but it seems to me to be a very iterative activity. It's not sort of once and done. But it's so important to an economy, it's so important to society. My ability to move money and receive money across the country means I've got opportunity right across the country. I didn't, when I couldn't do that, imagine home working without digital payments. It's completely implausible. So it's a hugely important thing to do, and to keep investing in, or to keep other people investing in if you don't want to put public sector money to it. And it has so many implications, good and slightly ominous, which is why you need to engage society. And society needs to be engaged itself, and there's no point building something and then society waking up saying, I don't like it.
Because they will find a way around it, right? That's what
they will find a way around it, yes. Yeah. So even those that don't want to be engaged really have to kind of just get engaged, and hopefully that way good things will come. But I don't know, the amount of stuff that there is on payments at the moment, the amount of, never a day goes past without another paper coming out from the BIS or the IMF or the World Bank. So all of that's incredible, or another webinar or discussion. So all of that, I think, is really useful, not least because a lot of it is telling you about different parts of the world and what they're doing.
And I love that. I really love the piece of advice about don't just see what they're doing, but understand why they chose that, why they chose not to do something else, because actually, that avoids the sort of accidental copy and paste, or, we think this country is similar to us, let's do what they've done. Because actually, if you kind of go in deep and look at the situation, look at why they did make the choices they made, it might well inform and help you shape the questions or shape where you're going. So it's not about knowing what's happening in China or India or Nigeria or the UK, but actually sort of understanding how they've got to that particular place. Almost the information before will be as interesting, if not even more interesting, than what they've actually got right now.
Yeah, I think it's the questions that people are asking is the most interesting thing, I think.
Yeah.
The way that they've answered them is particular to them, and it's useful to, see how they've got to where they've got to.
So questions, like, asking ourselves the right questions, looking at our country, where we are, where our consumers are, where we are in terms of trade, what is going on, what are our public policy, what is our digital financial literacy. All of those things will really be different. Every country is different, so sort of thinking critically and involving as many stakeholders as possible in the conversation. That seems to be, a good takeaway message from today's.
Yes. And I suppose finally that, to maintain the trust in whatever payment system you have or monetary system you have, you really do have to now, because people do have digital choice to kind of operate somewhere else. You really do have to invest in it.
So trust is key too. Lovely. Thank you so much, Natasha. It's been great chatting with you. I hope our participants have also enjoyed the conversation that we've had today. It's been really interesting. We can no doubt talk more, but I will look forward to more conversations about payments this year as we go through our webinar series. Natasha, thank you so much. Have a great afternoon, morning, evening, everyone, depending where you are. And the recording will be shared with you all shortly. Please do share amongst your network, because we'd love more people to be involved in the conversation. As we talked about, the more who know about payment systems, the better, hopefully, choices that we'll be making. Thanks, everybody.
Thank you.
Bye-bye.
Bye-bye.